Good afternoon. This is Clark Neighbors with BIS Commodities with the market commentary for the week ending June 30th, 2017. Finally, a interesting market after a very dull, range-bound affair in a lot of these grains over the last several months, mainly led by the wheat. So if you look at the markets this week, corn was up 11 cents. Soybeans up 35 cents, and for this week, Chicago wheat was up 51 cents, obviously being led by the spring wheat, which was up much more. More on that in a bit. For the month of June, corn down a penny for the entire month of June. Beans were up 26 cents, and wheat, Chicago wheat, up 82. Now, again, this is the end of the quarter, into June. We had a crop report today. I'll give some updates on that in a little bit. Looking back on corn, if you look at each quarter, into Sep, into Dece, into March, and into June, corn's had a 15-cent trading range via the closing ranges at the end of those quarters. Beans, the range there has been about 80 cents with the high back in December, and currently the end of June here is the low on beans over this same time frame. And wheat was very monotonous also until the rally this week. Now the rally on the week is led by the wheat, is led by spring wheat, which would be your spring crop or Minneapolis wheat. And keep in mind that the reason we're seeing this is weather conditions that have transpired not only this spring but currently this summer in the Dakotas and the northern plains and the southern prairies of Canada. Keep in mind here in the U.S. about 70% of the spring wheat acres are in North Dakota and of all places Montana, and so I think that's kind of key going forward, and that's the watching point as we close this Friday going into a kind of holiday shortened next week and a critical time of the growing season on many of the grains in the Midwest. Now, interestingly enough, the reason we need to pay attention to some degree on corn and beans also for that part of the world, more specifically beans, the fourth largest bean acreage state, believe it or not, is North Dakota. If you add the bean acres this year in North Dakota and South Dakota, is 12.2 million acres. In comparison, if you want to look at something in the east, the Ohio and Indiana bean crop only entail 10.9 million acres. So there's more bean acres in North Dakota and South Dakota. Also keep in mind corn acres is real similar in both regions, North Dakota, South Dakota, and Indiana and Ohio. Each raise about 9 million acres of corn. So something to watch going forward, maybe more specifically in the beans than the corn, just from a comparative standpoint. The summary of the report today from the USDA acres, corn acres for this year estimated at 90.9 million acres planted. The trade was looking for 89.9, so there's about 1 million more acres of corn than the trade estimate, and that's also about 1 million more acres than what was reported back on the March intentions. Bean acres 89.5, the trade was looking for 89.75, slightly lower than the trade estimate, but still slightly more acres than the March intention number. Wheat 45.6 million acres. Keep in mind abandonment of spring wheat's down about 3.7%. Some think that number may get a little larger, again factoring into this strength in the wheat market. On the stocks report, corn stocks came in at 5.22 billion bushels. The estimate was 5.1. A year ago, stocks were 4.7 billion bushels, so we're up like 11% on stocks. I think if you look at Iowa and Illinois combined, it's 303 million more bushels of corn today than a year ago at this time. Bean stocks were slightly lower, 963 versus a trade estimate of 983, down about 20 million. That's still quite a bit above a year ago, 90 million bushels more than a year ago. And the wheat stocks came in right in line with what the trade was looking for, so the wheat stocks wasn't a big issue at this point. So in a nutshell, Wheat was positive based on planted acres being down and the abandonment. The bean report was slightly positive based on acres slightly lower than what the trade was looking for, and also stocks being slightly down. And the corn numbers, in all honesty, both were somewhat negative. So going forward, keep that in mind. The other interesting part this week, more from a side note, in talking to producers, talking to country elevators in the Midwest, there is a tremendous amount of unpriced corn in the country on old crop, even at this time. Many referring to basis contracts that were written this spring, last winter, last fall against the July contract that had to be rolled out or priced by the end of this week. I think that's had some impact on the market early in the week. We saw carries build, possibly because of that, and also because exports look a little tough on corn for the next couple, 3 months. Right now, though, weather is going to be the key thing going forward. Excuse me just a second. Pardon me. Weather going forward is going to be key. That's going to be the talking point next week with that shortened week. Keep in mind the markets close at noon on Monday, no markets on Tuesday. We open again Wednesday. So the calendar is key. Obviously, early July is a key time of the growing season. Right now, as we go home on this Friday, there is some talk again of the western corn belt, or more specifically the northern plains. Continue to see some heat potential, maybe not as much rain. The balance in the Midwest, though, looks okay at this point. So the weather's going to be critical, but the timing, if you're a producer out there with old crop corn and possibly old crop beans, timing is really critical. This is a time of year where historically the market tends to drive a little lower once the market's comfortable that there's no weather threats involved. So definitely kind of be on your toes here the next 2 to 3 weeks, because this may, potentially be, if the weather gets a little tough, the best opportunity to make some good sales, not only on old crop but for the new crop that you may see in quite some time, depending on how things move forward. So be very cognizant of the timing, and it's always a hard time to make sales because nobody out there knows what the weather's going to do. You can listen to the weather forecast, and we know how that goes. So if you get to levels you kind of like that make sense, obviously look at some strategies that you can use to protect inventories with options, or make some sales, or keep in mind, as I mentioned before, especially on corn, any kind of rally in this market may be suppressed by the tremendous amount of old crop corn left to be priced. So again, look for these opportunities over the next 2-3 weeks as a really key window. If you have any questions, feel free to call us here at BIS Commodities. Phone number is 800-373-2525 or biscommodities.com. Again, the markets are open Monday, and then we'll be closed Tuesday for 4th of July holiday. So we wish everyone a very happy 4th of July, and we'll talk to you next week. Thank you.